Today's market call is brought to you by MoneyLion, the first digital ecosystem for consumer finance, empowering everyone to make their best financial decisions. A little after 1 p.m. on the East Coast. That's my fault, by the way, folks. Here in South Beach, we're at the Fontainebleau Hotel in a conference room called Splash 4.
You love that.
Which means there are at least 4 splashes. Apparently, there are 8 splash rooms.
Yeah, we are at the iConnections Global Alts Conference. Guy and I are down here, for 3 days or so? We're going to do this.
Unbelievable.
Yeah,
we're going to be here forever.
Awesome slate of content tomorrow. Guys doing Michael Saylor. We have Steve Cohen here, Howard Marks. I mean, the list goes on and on of the ballers in the finance industry.
What?
Finance industry ballers. Like players. Going to be fun.
Ballers.
And then we're doing CNBC's Fast Money from here tomorrow and Wednesday. So tune in. We're going to also do market calls here, Guy, for the next couple of days. We got a lot going on here.
But before we even get the busy market day, we're going to get into it. But thank you to our loyal listeners and viewers, because over the weekend we plateaued. We went over 100,000 YouTube subscribers, which puts us in the top 0.6% of all YouTube channels. So thank you for that. And obviously, Timmy, Amanda, Jacob, Bill, everybody.
Yeah. Hey,
congratulations.
We're going to get to Carter Braxton Worth of Worth Chart.
No way.
He's got some really important stuff to us in 2 minutes. But let's just set the stage here for a second, Guy. We have an S&P that's down nearly 2%. Mm-hmm. We have a NASDAQ composite that's down 3.4%. We have a VIX 19 handle.
22.5, I think, at one point today. Yep.
We had some of the fateful 8, some of the biggest movers in the stock market. We have Nvidia down 16%. We have Broadcom, which was the latest addition to the fateful 8, down 18%. A bunch of those other AI infrastructure names getting slayed. We're going to get to all that. But why? DeepSeek. This is a LLM. It's a competitor to ChatGPT here by OpenAI. In China, though, DeepSeek released some data over the last few days showing its performance relative to OpenAI's ChatGPT. It's kind of taken the AI or tech world by storm a little bit. That's why it's causing the decline in some of these competitors here in the U.S. I have to mention Taiwan Semi, Guy, huge, manufacturer of these high-end GPUs, also down 14%. So again, we're not going to get into the weeds. You guys can, it's probably plastered all over any website about finance or about tech right now. But guys, the reaction to this piece of news that some people had been talking about for at least a week or so, in one fell swoop to take so much air out of this generative AI trade, thoughts?
That's why you should be concerned. Now, we can talk about the viability or the veracity of the comments around DeepSeek, whether or not it's viable, whether or not the numbers that they say are actually true in terms of the percent. You're talking about percentage points of the spend compared to some of these other things, percentage points in terms of chip use compared to these other things. It's concerning. But this is what we've been talking about through my lens incorrectly for a while. The fact that competition was coming. And Doug Cass tweeted about this, but we've talked about disruptors being disrupted. And that's what we're seeing. And if you have any concerns, the concern should be not necessarily DeepSeek, but who else is out there that we haven't heard about? And, those 77% margins that Nvidia has enjoyed now for the last couple of years, I've thought for a while that that's just a matter of time before that starts getting chopped away. And it's when margins start going down is when you start seeing stock degradation. And to be able to take $500 billion of market cap away, which I think is about where we are today in terms of Nvidia, that should be concerning.
Yeah, and again, you've said this on numerous occasions, the disruptors, the incumbents, right, that had been disrupting a whole heck of a lot of different industries, and they start building out this infrastructure, spending hundreds of billions of dollars. Sooner or later, it's likely that somebody's going to build a better mousetrap. The difference here, to your point, Guy, is supposedly this company that didn't exist 2 years ago that only raised $6 million has a mousetrap that's as good as the ones that people have spent for hundreds of pennies.
Right.
Now, just really quickly, here's the caveat. like there's no way in hell the Chinese government has not backed this company. They are obviously not particularly happy that the US had put restrictions on high-end GPUs to China. We know that the way China operates tech is they basically own it, right? And so at the end of the day, it's in Chinese best interest to kind of get behind a company like this and put out an alternative to the rest of the world. I would almost call it a digital belt and road, if you will, Guy, if that makes some sense in a way. So that's it. The stocks are reacting. Let's bring him in, Carter Braxton Worth, because this is probably one of those days that just gets him particularly geeked up. Carter, are you geeked up? You don't even know.
I mean, it's always so hard. Look,
like a leather.
Whenever you see a slip, it's like someone walking along and there's a small slip on the ice, or you're like, oh, is that thing it's gonna spill the groceries, then knock over land on the pet, and then kill the person? I mean, how bad can this be? Or is it, whoops, he caught himself and now he walks on? Hard to know. The market is obviously, again, complacency would be the word, right? A lot of money's been drawn in. A lot of people are quite bullish for the year ahead, just as they were bullish for the prior year and made good money. And so it's always this, what comes along to change it, and who could come up with a narrative of deep? I don't even know what would you call it? Deep something?
DeepSeek.
What could have been broad sea?
It's like
blue sea,
Mariana's Trench of technology.
Blue iron. What's the one in the movie? Wall Street. He goes blue unicorn, or what is it?
Blue oyster.
No, it's not blue oyster. It's blue steel. Isn't it like blue steel or something like that?
Blue steel, right. Anyway, but I mean, the question is, here on the day, we're well off the low, but we're still down on the day with the gap. And internally, of course, there's more damage done than would, and that's often the case. It's
horseshoe, by the way, not
blue
oyster.
horseshoe. That's right.
Blue horseshoe. There you go.
So I channeled my inner Carter Braxton Worth last week, and the charts that you're about to show us are going to be, where I went with. And we had obviously an uptrend that was violated, and then the subsequent bounce back up to the uptrend that has been failed. So walk us through, because, as I thought last week, the potential failure could be really problematic. So walk us through it, Carter.
Yeah, so here is the QQQ. The first thing that would jump out is we didn't make the new high on Friday or last week before the setback today. And so if one were to depict it that way, of course, this next chart will do that. It will show that, that's the primary trend. We've broken trend. We've recovered on the snapback in Philly. But listen, the lines can be drawn many ways, just as it could be drawn this way. And so we go back and forth on those last two. Which is better? That it's subjective, and both are valid. One is much more forgiving, the latter, right? This one. We can add to it. We can call this, of course, just a pair of twos. It's a standoff after a very big run, right? So from the August 5th lows, almost all securities, except for real duds, almost all bourses around the world are up substantially, and the setback doesn't change much. And yet you could also say, and this is very important, we're not that much higher than where we were in the summer of 2024. And so one could say, really, the net, with volatility, the net effect is not that great for the Qs in terms of appreciation. But let's also look, I think, at the longer term, which is important. And so were we simply to come down to this trend line, that would imply a good bit further. I think we might have a second iteration. And so is that the proper way to draw the channel? Again, one could tighten it up and say we're at the lower band now. But this would argue that we're just smack dab in the middle, and that it's just a minor setback and the uptrend's intact. Or one could argue that we're smack dab in the middle and we're headed to the lower band. And all of that is valid and fair. And the point of showing these here is that these are all valid interpretations of the current circumstance that is the market. I think we've got the SOX here as well. Here's a longer term picture. So we've got that COVID low, you've got the surge in 2021, you've got the 22 bear market, SOX drops almost 40%, but let's annotate it, and here we have it. And so, that's, I must have misdrawn those. Those lines don't look right, but I apologize. But either way, we might have a log scale. Do we have that or no? Do we have this? Okay, so this is the bigger problem. This is the ratio chart. It's a relative performance line. It's one thing divided by another, depicts the SOX performance to the market, to the S&P. That's not a good picture. by all accounts.
But
Yes?
Carter, I love this chart, and that looks like whatever you want to do. It's going back to that kind of breakout level, right, from late last year, if you will, or actually middle of the last year. And so you could look at it as a ratio like this. It tells a story. But let me ask you this: let's have Amanda just pull up the SOXX. That's the ETF that tracks the stocks. And we're kind of done with the SMH guy. It's just not a well-constructed ETF when you have Taiwan Semi and Nvidia making up a disproportionate amount of that. But Carter, this shows the same thing versus the S&P that just made a new all-time high, I want to say a week ago, right? And look at how the stocks coming into, let's say, Friday, it was down about 10% from its all-time highs made in the summer, right? And now here we are, we're down 20%, but it's kind of within this kind of range a little bit, right?
There's not a great moment of inflection. I mean, just hours ago, as of the weekend, we were at the top of this 4, 5, 6 month range. Now we're kind of closer to the bottom, and we're on the high of the day kind of right now, or close to it, I believe. Where are we trading now? At 211? No, not at the high of the day, but it would take further weakness from here, and immediate weakness, to really start to bend this down and create the major top that prospectively is in
right.
fact.
I mean, well, that's exactly right. I mean, the torque required to sort of get that moving average to start to roll, which it appears like it is, by the way, is going to be significant. And we're at huge support levels here, and it's been there for quite some time. I mean, maybe we get down to those August lows, which that was, again, that August 5th day was a bit of an anomaly, but it happened. You can't back it out. But, this shows, for me, Carter and Dan, and I'll start with you, Carter, this just shows the vulnerability of the market. And one thing that I've said was, when valuations are this high, not that they're a trading timing tool, but it gives the market less and less room for error. And when you have a dozen or so stocks, if not more, down anywhere from 13 to 17%, that shows you exactly what I'm talking about, Carter.
Yeah. And so the proper designation, we all have our biases, and we want to see things that are maybe so, but not. But if you, again, just observe this pattern, one would say, this is what a pair of twos is. This is a hand that you don't bet big on, right? Druckenmiller always talk about clearly defined situations, clearly defined moments, and you bet big, and that's the case in all of life. A big moment in sports, a big moment at the bar, meeting this person. You got to,
at the poker table, baby.
Whatever it is. This is a pair of twos.
All right, but Carter, let me push back on this for a second. All right, so I see that range. I see where the SOX is trading at, basically at support. Amanda, pull up Nvidia, a 1-year chart. Let's put the 150-day moving average on there. Okay. And let's draw a trend line. I'm sorry to, step on your toes here, big man, but let's draw that trend line, and let's bring it up right to the low
it's probably a bit of here too. Is it a bullish to bearish reversal? Meaning you have the precondition of a great bullishness, and is it ultimately rolling over? And that's the presumption for every high flyer. At some point they roll. But one could also say, and if you pulled up a 5-year chart, just to put this in context, right? Let's just do that. This is if a stock that runs to this extent that it has is unchanged, which it is now for 10 months, is that a disaster? No. If it's going to give back a great deal of that run up, one could say this is just like a hanging piece of fruit that's going to drop off the branch, and you can make great money short. A perfectly valid interpretation. But what we do know is, as of now, if you're unchanged for 8-10 months, you're not extended. You've worked off or rested some of the preceding strength, and it's anybody's guess here.
But Carter,
I wouldn't want to be long.
Right.
The question is, do you press shorts here, or do you harvest and go to the side?
We would agree with you. It's not a great press, right? So the stock is down 23% or so, over the last guy. What some of these sell-offs from like all-time highs, we've had plenty over the last year. What have we had? Like,
well,
what's
this
the range
is the
been?
third. I mean, if you want to get into it, we talked about it on this show. I mean, back in March, stock made an all-time high, closed lower on the day. We talked about that being a engulfing pattern. Carter and I know you had the same conversation. We said technically not very good. By May, the stock was down about 23% or so. The same thing happened in June. If you go back and look, stock made an all-time high, closed on the lows, and I think we traded off some 35%. That August 5th day obviously being a bit of an anomaly, and we talked about this recently. I think it was January 6th or 7th. Same engulfing pattern. I think the high was 153 and change, closed on the lows. And we said flat out that, you know what, this sets up for the same thing we've seen now twice before over the last year. And obviously it's playing out today.
All right. So Carter, just one quick one. And again, I don't mean to push back. So this is the 1 year. Is there any support down to 100? And then I want to go to a 5-year log. But like, you know, what do you think here on on this 1 year? You said it's back to where it was 6-7 months ago. It's basically gone sideways, except, and I know you don't care about the fundamentals.
Back to where it was in June, May, June, right? So,
and I know you don't care about fundamentals, but the fact that this trade was so concentrated, this stock's performance in 2024 made up 25% of the S&P 500's performance. Okay. And I get all that. Where do you see support? And then I have a question on the 5-year.
I mean, support is not clearly defined here, right? And so can it work lower? Sure. I mean, ultimately at 100, I would think he would have a hard time getting worse.
Yeah.
So,
but that's like the September. I think it's the September low was like 102 and a half or something.
All around in that level. So does it drop another 18, 20%, which is a whole lot? And look, the thing is, there are people who are, it's all about, again, and I repeat myself, and I know that, knowing who you are in the market. Yeah. There are people who have a 3-year view of this enterprise and what it can deliver and what it will mean for the world, who are literally adding today because they don't care if it's going to go to 100.
Yeah. Well,
these are stewards of capital, not someone like me with my personal account. These are people running $20 and $30 billion portfolios who have all the life savings of nurses and cops and firemen and teachers. And their job is to look. Now, can you look out 3 years? I don't think you can, but that's what they're paid to do. And I've talked to some of them today, and some are literally reducing and others are adding aggressively. Go figure.
Yeah. So again, get all that. You know, I want to pull up a 5-year log because listen, I have and Guy have things that you don't care about. We have some fundamental concerns, but if you were a 3-year, you know, taking a 3-year view 3 years ago, you got 1,000% performance to its recent highs. Okay. Like again, so the idea of taking some profits on the first piece of fundamental news that seems, listen, a month ago, when Broadcom gapped up 40% in 2 days, these two knuckleheads were that's you too, by the way. We were like, this is a big deal that 50% of NVIDIA's customers, okay, that's Microsoft, Meta, Google, Amazon, OpenAI, Tesla. Okay, so just think about those names. I'm missing probably one. They're all working with companies like Broadcom and Marvell to design their own specific GPUs for processes that, you know, on their infrastructure that they want to obviously their customers around compute. So at some point, you know what I mean? Like there was going to be a deceleration, or there has been a deceleration, but a guide lower, right? So now let's just look at this 5-year. You can look at that 150-day. It's probably doing the same thing, Carter, for you as if we were to draw a trend line. But isn't that a really significant break in trend going back to the start or the end of 2022 when the market bottomed? And just to be clear, from the highs in 21 to the lows in 22, the stock lost 75% of its value. Now, this stock could be down, and I've been saying this for weeks now, could be down 50% like that. You know what I mean? So I'm just curious on this 5-year log.
Yeah, sure. So we know, just to your point, in the 2022 bear market, it lost 69%. In 2018, it lost 60%. I mean, the nature of high flyers is aggressive sell-offs that, you know, shock people at the time and often cause people to dump. And yet other people are I mean, from the COVID, it lost 44% in about 4 weeks during COVID. So the question is, does it have further downside? I would say there's downside to about 100.
All right, so real quick, I mean, and I don't want to bog down on this, but if put up a Broadcom chart, comes out AVGO, so it's either a B in your acronym or an A, depending on how you play the game. But it was December 16th, I think it was a Monday when they came out. Now, to be crystal clear, I get a shitload of things wrong, but one thing we've gotten right was Broadcom up until that point, and we've said over and over again, if you're looking for a tech name, chip name that makes sense on valuation, it comes in the form of Broadcom. But then when the stock goes up 35 or 40%, all of a sudden you go from relatively cheap to probably expensive on valuation, regardless of what you want to talk about, tangible, total addressable market and those things. We have now round-tripped effectively that gap higher. I mean, we got to go down another $5 or so, but you see what I'm saying here, Dan. So, you know, it's now you're looking for levels, right? Where do I get back into Carter's point? And I don't think we're there yet, but at least now you got to start thinking that way.
Yeah, and Carter, you know, we have on Wednesday, I think it's Microsoft, Meta, and Tesla reporting, a couple more Apple maybe on Thursday. I mean, again, we've been talking about this for a couple of weeks. What I've been most interested is to hear what these companies have to say about their CapEx, you know what I mean? Because that is something that obviously is very important to NVIDIA. What does their bookings look like, and the like? So again, I think the fundamentals are something that have been fantastic. You know what I mean? But again, you're looking for reasons to sell. In my opinion, that's one reason for the underperformance since last June. And that is a reason,
right? I mean, that's up. It's the biggest single performer in the Qs today. It's very defensive because of reasons that we know, and yet it has no growth. So is it? You know, these are complicated things. The one thing we know about Nvidia, because it is such an important name with obviously Avago and Taiwan Semi, is that the street loves it, right? So if you look at the average price target of some 80 analysts, about 175, and here we are trading at 118. But ever thus, the high on the street's probably 220, 230, and the low is like 95. And that's the great mystery. And one can say, well, you know, charts have these problems. Charts, you know, it looks great until it doesn't. It's the same thing there. How can one analyst think it's worth 95 and another analyst think it's worth 220? I mean, what the what? That's a joke.
Yeah. But like you say, no lines, no judgments, no, you know what I mean? I'm not trying to mimic. I'm just saying, like, that's what the technician, that's what your job is. You do a great job of it. And oftentimes it does not match up, right, with the fundamentals, the folks that are clinging to their price targets and their estimates, right? So, all right, Carter, we really appreciate you being here on such a busy day.
Yeah, enjoy Florida. I like that fountain. A lot of pools down there. They got about 10 of those things.
A lot of pools at the fountain.
Fun in a pool.
So by the way, guys, you know where to get Carter Braxton Worth's work. That would be worthcharting.com. He's got a lot of great stuff out there today. Guy, let's talk about this Apple. He just brought it up. You were talking last week about this 220 level. And maybe Amanda can pull that up. Let's throw a 150-day moving average on there. Let me just give you quickly why I believe the stock out of the gate was down a little bit, but then it came up. And we talked about it on the Tape podcast that dropped this morning sometime around, is that this is a company that has not spent tens, if not hundreds of billions of dollars on generative AI. They in June, they announced that they're going to partner with OpenAI, license. They weren't that clear about it. People thought that at the time they were going to be paying OpenAI. It looks like they weren't. So they basically said, why buy the cow when you can get the milk for free? And while the Apple Intelligence has not caused the upgrade cycle for their phones, I think a lot of investors are like, well, that was pretty smart. You and I talked about it over the summer back in June. And again, you could have been positive about that one fundamental piece of news, but you didn't have to be impressed with what the offering was.
What I said this morning and what I'll repeat here, if you didn't hear it, you know, Apple is being rewarded for not jumping into the pool with everybody else, right? So if you want to play a little stock market game, they were a trader or an investor that did not go all in on the AI trade and sat on the sidelines and watched the world pass them by. And now theoretically, they're getting rewarded for that today. But then think about really the problems with Apple, if there are problems. Valuation is a problem without question. And it's still about the integration and, again, the upgrade cycle around it. So the fact that they didn't spend, good for them. But it doesn't mean that that's going to be a boon for their business. They still have to prove the integration. Now, 220 was a level. We talked about it last week. We said if you're looking for a place to sort of play a little stock market, that is support. And that proved to be true at least for today. They report this week, and valuation is still a problem. And there's clearly still something going on. And obviously, we're starting to see the competition in some of the China headlines coming out. So, my opinion, this was a rally that made sense off that level. I'll say it right here. If I'm wrong, I'll be the first to say it. But I think this is going to be short-lived past earnings this Thursday.
All right. So here's one take here. Again, Apple Intelligence was never going to be in China. Supposedly there's 300 million iPhones in China that probably are 2, 3, 4 years old, something like that. So the idea that you're going to get a big upgrade cycle in China is not particularly great. And now all of a sudden, if you were a Chinese consumer with an Apple iPhone and you wanted to use OpenAI's ChatGPT, now you have DeepSeek. You know what I mean? So, like, again, there's no reason to do that. And you might also see like WeChat and their super app and now DeepSeek and the version of TikTok. Maybe you just buy a cheaper Android phone. And the other thing I'll just say about this is that as tensions continue to get ratcheted up with the tariff, trade war, all that sort of stuff, you know, the Chinese over the last couple of years have made nationalistic consumer choices. We've seen how weak EV sales out of Tesla have been. We've seen a slowdown in Apple iPhone. So their guidance, really important to me. I want to say over the last 4 year, guys, you know, China has been a boom or bust for Apple, and it really feels like the bust is not over.
I agree. We're going to find out. Let's take a couple questions real quick. Nocturnal Sky, that's a new name. Advice on AMD. Well, I'm not going to give advice. This is what I'll say. And we have been negative on this name for a while. And this is a stock that now today, I believe it's making a 52-week low, if not right around it. It's been basically cut in half from its all-time high, which is pretty remarkable if you think about it. And it's still not particularly cheap. So again, just me looking at it, and this is consistent. Like, I still think there's further room to the downside in a name like AMD. It's not you're running away from it here, but you're looking for a spot, and this is not it. I don't think this is it yet, Dan.
195, maybe pull up a 5 year really quickly. And again, why are we focused so much on the technicals when the fundamentals are as blurry as they have been for a bunch of these names? I mean, you're trying to kind of grasp for anything that can help you think about this. But the price action since their Q3 earnings back in late October, there was a gap, and it just kept on going lower. It barely saw an uptick. Guy, I want to throw up two other charts here because it's similar sort of themes. Let's go to Micron for a second. So, you know, this was a story. The stock took off, you know, late or mid last year. I want to say in the spring.
Yep.
You know, all these servers, they need more memory. There's so much demand for the servers and the data center and the compute and yada, yada. Well, look at this thing, man. You know, this kind of, what is it, mid 80s, 85 or something like that. And, you know, go back to mid-December. That gap was on their earnings and guidance. And people were trying to explain it away. Oh, AI is fine. It's just all the other consumer electronics. That's a bunch of shit, in my opinion. You and I said it at the time. So Micron's another one. I just want to pull up Dell also because, again, not too different of a story. And so we are trying to put together a bit of a mosaic about a lot of these other names that were kind of put into this category. That had a big gap in late November, kept on going. Look at it now. You tell me, Guy, is that also going to mid-80s?
I mean, yes. Well, I don't know about mid-80s, but mid-80s would be a round trip from when people got really excited about this. I think it was last fall or so when the stock basically doubled. So round trip makes sense. In terms of Micron, again, I'm sorry to keep doing this, Amanda, but pull that up because you had those series of highs that we were bumping up against, a huge resistance level in Micron. You can see it right there, and it all was in the form of the 150-day moving average. Each time we traded up to it, each time we seemingly failed at it, and now you're having this sort of downdraft. And I do think there's more room to the downside. And real quick, this is from Eric Lancelotti, and this plays into it. Can you guys explain why rates are down today? Is it a slowdown narrative related to the AI news? So we have a DeepSeek slide that Amanda made, and this is fascinating because I think, look, technology down 5%. Yeah, that makes sense. Number two is utilities. And if you were to think about it, historically, utilities are a flight to quality on days like today. It's not happening. And when rates go lower, utilities do well. Well, you have a potential for a flight to quality. It's not happening. And you have a potential for higher on lower rates. That's not happening. It's down because this has been sort of the AI adjacent trade. To answer your question specifically, yeah, I think rates are lower on the back of that without question. And on market days like today, you do see a flight to quality in the form of the bond market. But again, I'll say it, we're one bad auction away from being back to 4.8%. And I don't care about what Fed Jerome Powell says on Wednesday, what the president jawbones. In my opinion, rates are going higher for the wrong reasons.
Yeah, and we got to give CC a shout out. DeepSeek, that's pretty good stuff right there.
DeepSeek.
All right, by the way, my main man CC, he's been writing our brand new newsletter. You can sign up for it at riskreversal.com. You get all the charts. They're all supportive of the kind of work that we're doing on the tape, OK Computer, and on Market Call. That comes out every day after the call. And it's also a market matrix guy is embedded in there. So we really enjoy that. CC's doing a great job with the rest of our team. Let's hit a couple things before we get out of here. The chart of the day, people, that was the Apple. We kind of jumped it. Guy, on the earnings front, we know that we're focused on a lot of those big tech names. I think it's pretty fascinating that Microsoft, Meta, and Tesla are all coming out hours after the Fed presser. There's going to be a lot of news going on there. If you guys go back to, maybe Amanda can pull up the SPX really quickly, December 18th. That was the day of the last Fed meeting. That was the day they kind of pushed out the prospects of further rate cuts. Let's go a shorter term. Let's go like 6 months or something like that. So you can see that price action. That was the last really bad day in the market, guy. That was driven by rate concerns and what the Fed had to say. This one fundamental to specific sector in the stock market, which has been driving, as we said, a lot of the performance. So you got a 1-2 punch, man. Like you got today's volatility on the fundamentals, and you're also going to have Wednesday the potential for fundamentals. But my question to you on the Fed, if they get more dovish, right? So they're a bit more hawkish last month. If they get more dovish, how do you think the stock market, how do you think treasuries react?
Well, the market will react favorably to that. I think, again, if they're getting dovish on the back of this market move, I think that's a real problem. But, for a day or so, the market might sort of enjoy that and take some solace in it. But, they'd be getting dovish for the wrong reasons. And again, this is, to me, this is beyond what I think the Fed is now sort of in the rearview mirror in terms of their potential importance for the market. I think market forces are now taking over, and you're going to continue to see, I think, over the next couple of weeks, this yield curve continue to steepen with 10-year yields going higher. People will say that's positive. I'm not one of those people. We have a GDP print coming out at the end of the week. We have this Fed speak. So there are a lot of things to be concerned about. Now, what's going to be fascinating today is, for most people, for pundits and politicians, with the Dow up on the day, today is not a market day for them. They are Dow Jones focused. So, but if you look under the surface, the NASDAQ down the move that it is, I mean, that's obviously a much different animal. But this, again, this dichotomy, this bifurcated thing, this chasm between the Dow and the NASDAQ, I think we're just getting started on this one, Dan.
Yeah, last point. So we talk about the potential for the Fed to get a bit more dovish. We know that, President Trump has been pushing as recently as this week, right? It was one of the first kind of major things that he said domestically that they want to accomplish is lower interest rates. He was talking about Jerome Powell without naming him by name. So you think about the market, while the Fed is not supposed to care about the stock market. If we go back, to the first Trump administration, President Trump was trying to make them care about the stock market when it went lower. Trump very much looks at the stock market as some part of a report card for his, what they're doing. So let's just say we get to about 5.5%, which was the decline, from December into January. We break that uptrend, and at some point we're down 10%. You're going to hear Trump going ballistic to Jerome Powell. Now, there's not a meeting in February, right? And the next meeting would be in mid-March. I'm sure there's plenty of Fed speak between here and then. But again, betting for a 10% decline in the S&P over the last couple of years, I wouldn't hold your breath. That's not a prediction or anything like that. All I'm saying is over the last couple of years, those sorts of declines have been met with like V-bottoms.
Yeah, well, we're going to find out. So Ken is asking, what are the chances the NASDAQ's down more than 5%? I think right now it's down 3.25%. There's really been no meaningful bounce in the NASDAQ today. Obviously, again, the Dow has bounced, but that's a completely different animal. And the S&P 500 has rolled over a little bit. So I actually think, and I'm probably in the minority for most people, that could probably be the best thing that potentially happened, flush some of this out. So if you were to see a down 5% day, yeah, it's going to be followed up by some dicey days, but at least you're washing out some of the excess.
Yeah, and usually I think it's a great point that you made. Like there wasn't really a big attempt at a rally in the S&P at any point. So let's see how it trades into the close. I think your point is that, if you have a VIX trading, let's say low to mid 20s, you have the S&P down 4% or something like that. That means the rest of the names in the market that are green, we just showed you the sectors, would probably all be red by then. So you have a VIX spiking, you probably have yields going lower, right? That is probably on huge volume. I know a lot of you guys are not day traders, so the idea of trying to like pick a bottom and buying them on the close and sell them if they gap up, 50 handles or something like that, because Trump is probably going to come out and make some not conciliatory, but there's probably going to be some commentary guy by those who don't want to see this thing go too much lower. Who knows? But again, that's probably the best case scenario if you're looking to put a bottom.
There will be, to the extent that President Trump does one of these press conferences, he will field a question about DeepSeek and its meaning, and are you going to ban DeepSeek, and you're seeing the impact it's having on our technology sector. He will field that question at some point. We'll see how the market reacts to it. But again, I think the most positive thing that can happen is to get one of these flushes. And real quick, there's a poll out that Amanda and Timmy, Jacob, Bill, CC put up in terms of, are you buying or selling? Are you buying Nvidia today, yes or no? So we have a lot of responses, so check that out. Real quick, Gary Webb is asking about Chinese stocks having a bounce. Alibaba, for the first time in a while, above 90. So yeah, you could start seeing one of these stealth rallies again in some of these Chinese names. And you go back to, I think it was November of last year, when whatchamaface, who owns the Carolina Panthers, whose name escapes me, David Tepper, buying everything that's not nailed down. By the way, that was the top tick, and that all those stocks round tripped. But we might be getting ready for round two here in some of these Chinese names.
Yeah, my quick take on that is, maybe this is ushering in a new era of innovation, for the Chinese internet names. And again, most of these companies don't have any meaningful business in the US. But if Alibaba is going to be the cloud provider to, Seek or DeepSeek, who knows? I'm not a China expert by any means. A big part of the malaise in these stocks has been a very weak consumer, right? And then obviously just these kind of trade scenarios that have been going on, because again, the weaker their consumer is, the less likely they are to consume these products and services. And the lack of ability to get access to our best technology is probably one of the things that folks have just said there are better ways to play the secular shift, and they predominantly have to do here in the US.
A lot of interesting things going on today. I just want to follow it up with one question we have about Oracle, if you want to throw that question up. I mean, that obviously, Oracle was everybody's darling for a while. You had that blow off top on the back of that press conference we saw last
Stargate, baby.
And now we're giving, I want to say, almost the entirety of the move back, if not, close to it. Again, that little island reversal is really, really concerning to me. It doesn't, again, the fundamentals of Oracle are good. Valuation is not stretched, but that technical little move there is problematic. So I will say, I don't think it's over in Oracle yet on the downside either.
Dude, that is one of the worst patterns. You and I said it on Fast Money. We said it on Market Call last week, that will most definitely be reversed. When you see a 2-day move on a fundamental announcement that has no meat to it. We were sitting on the desk at Fast Money on Tuesday when Sam Altman, the CEO of OpenAI, Larry Ellison, the chairman of Oracle, and Masa Son of SoftBank made this absolutely outrageous announcement that those three companies were going to work on an effort to fund, $500 billion.
Hold on a second. You say outrageous, people be like, "Oh, Dan, you're playing politics." You know who else said it was outrageous?
Elon Musk.
Yeah. So I just want, people to understand.
And we've been talking about this in a way. So Sam Altman at OpenAI is like, he and Elon Musk, they
don't like each other.
They don't like each other, to say it nicely. And I think Sam Altman was trying to curry favor, give Trump the opportunity to go out with another major tech maven, right? And just give him like the thumbs up that we are going to be doing all this spending because of you and that sort of thing. I think it had more to do with DeepSeek. I think that Sam Altman, Elon Musk, I think a lot of these guys have actually been tracking the performance of this new large language model, and they're like scared shitless a little bit because they've been spending tens and hundreds of billion dollars collectively to build out their own models, right? To build out infrastructure that trains them, and then is going to be there for inference for all their customers who are renting the compute from these data centers. So again, a lot of what we've seen right now is this very bearish take. And again, who knows how this plays out, that a very low cost without a lot of technology that our companies have been using over here, a low cost model is performing as well as all these other ones that have been, built on hundreds of billions of dollars.
And just so my outrage goes across both sides of the aisle. I mean, a lot of people are going to now go back and see what that Pelosi indicator did. They exercised a bunch of Nvidia calls last week. They sold a lot. I mean, it is pretty remarkable how, and that's my outrage is on both sides. I mean, and there are a lot of people now that this might be the final straw that people say, you know what, this is just outrageous.
Except that both parties don't want to see it
I mean,
go. I know.
You know what? Yeah. I mean, that's fine, but somebody's got to step up and say, you know what? If you want to be an elected official, you got to sort of shelve that shit.
Yeah.
Because it pisses people off.
It pisses me off, Guy. It pisses you off. One thing before we get out of here, I just want to say this. So Guy and I, we're a little geeked up here. We're down at this conference. There's like thousands of people. We got a lot going on. So we're kind of jazzed up. We're not jazzed up. We're not dancing on the grave. We're not happy that this is going on.
We don't change them. I mean, up, down. It's just like, this is an emotion.
You and I have said this numerous times over the last month or so. We are rooting for the U.S. economy. We are rooting up. Well, we don't have our pom-poms out about the stock market. When we see goofy stuff, we're just going to call it out. We're calling it the way we see it. So, listen, you could say that a year ago you felt this way about the concentration in the NASDAQ. Why were there multiple turns being added to some of these names, even the ones that are going to decelerate? You're not even anticipating any competition, yada, yada, yada. But you got to make sure you understand what the bear story is. I've got a lot of price action wrong in these names, but that is because it was part of a mania, if that's fair. Okay?
If you didn't point it out, if we just came here again, understanding that, for me, there are a lot of things that just continue to go parabolic, but the stories, the concerns didn't go away. For a lot of these things, concerns just got bigger. And today is just one day. I mean, we could be back here tomorrow and the market closed well and we're back on but those concerns are still out there. And I'll say what we started the show with and what we'll end it with is DeepSeek, interesting story. We'll see again the viability, but it's a competitor. If you think this is the last one that's going to come across or the last one we're going to be talking about, it's just not going to happen. You're going to hear more and more stories, I think, about things like this. And when a company enjoys the margins that Nvidia enjoyed, people say they have a huge head start. They have a big moat. In today's world, a head start isn't what it used to be, and those moats can get really narrow really fast.
Yeah, last thing on this. If you have seen DeepSeek rising up the App Store charts, okay, I think it's the most downloaded app in the Apple App Store. We know that TikTok before was taken out of those. I think a week and a half ago or so was up there in the top 3 or 4. If you were to download DeepSeek to your phone, you got to have your head checked. I mean, seriously, because what is yes, it's an open source model, but if you're concerned about TikTok, or the powers that be were concerned about TikTok, the influence, right, that the CCP might have over our citizens by tweaking their algo to push whatever they want. Think about DeepSeek. If this is supposed to be an answer engine, this company is censoring so much stuff in China. Okay, if you put in, I guess in China,
Tiananmen Square, it'll be like we don't have the information. Can you help? I can help you with something else.
It's insane. Okay, well that's it for us.
But no, to your point, if you were exercised about that balloon flying over the country that subsequently got shot down, you should be equally you should not be the person that's downloading this app.
Of the balloon. When was that?
I don't know.
That was goofy. All right, peeps.
That was fun.
Thanks for being here with us. We'll be back tomorrow at 1 o'clock. We're going to be from some really cool stage during iConnections Global Alts in the middle of that convention center. So we're super excited about that. Guys, you got to tune in. I'm about to record with Gene Munster of Deepwater Asset Management. There's not a better person on the street to discuss what's going on with DeepSeek. So we're going to go deep into the DeepSeek.
That's the title.
So we're going to do that. It drops tomorrow in your favorite podcast store. If you're not following the On the Tape or the OK Computer, go there, do it, share it.
Doesn't cost you anything.
Doesn't cost you anything. All right. Thanks, everybody. We'll see you tomorrow.